Okay, if you are even thinking about buying a house anytime soon, you need to stop what you're doing and listen to this. We are seeing some absolutely shocking changes to the rules of home buying. I'm talking about things that could completely alter your path to getting a home. So yeah, let's just dive right in.
So, let's kick things off with a question that, honestly, would have sounded completely insane just a little while ago. Could you actually get a mortgage without a minimum credit score? The answer, and this is wild, is now yes. And that's just the tip of the iceberg of the changes we're going to cover.
Yep, you heard that right. Starting November 16th, Fannie Mae, and we'll talk more about who they are in a second, is getting rid of its minimum credit score requirement. This isn't some tiny little policy update. This is one of the biggest shakeups to the lending world that we have seen in decades.
So what this slide shows you is the shift from basically a robot to a real person. For years, the old system worked like this. Your application went into a computer program. If your score was below, say, 620, bam, the computer could just spit out denied. End of story. The new system brings back a human underwriter who will do a manual review. They're going to look at your whole financial story, not just that one 3-digit number. So who does this really help in the real world? Well, picture someone who's self-employed, right? Their income goes up and down. Or think about someone who maybe lost their job for a few months, and it put a bruise on their credit, knocking it down to a 570 or 580. In the old system, that was an automatic no. Now, a human being can look at that and say, okay, I see what happened here, but they're back on their feet. It's a total game changer for anyone whose financial life doesn't fit into a perfect little box.
Now, to really understand why this is such a massive deal, we need to pull back the curtain and look at how the whole system works. Plus, there's another huge rule change that's happening right alongside it. First off, what even is Fannie Mae? It's simple, really. They don't lend you money. Your bank does. But then, Fannie Mae, which is this huge government-sponsored company, buys the loan from your bank. And that's the key. It gives the bank its money back, what the pros call liquidity, so it can turn around and give a loan to the next person in line.
And this slide just lays out that flow of money perfectly. The lender loans you money. Fannie Mae buys that loan, and now the lender has fresh cash to do it all over again. Here's why that matters so much. Because Fannie Mae buys so many of these loans, they get to set the rules. So when they say no more minimum credit score, you better believe every single lender in the country sits up and pays attention.
Okay, so on top of that bombshell, here's another huge rule change that just took effect. Medical debt collections? They are no longer supposed to show up on your credit report or drag down your score. For the millions of people who got dinged on their credit because of an unexpected hospital bill, this is an incredible relief.
But here's the thing, you need to be proactive. You have to pull your credit reports from all 3 bureaus, that's Equifax, Experian, and TransUnion. If you see an old medical collection still hanging around on there, you need to formally contest it and get it removed. But one really important warning, this does not mean the debt magically disappears. You still have to pay the bill, it just can't hurt your credit score anymore.
Okay, so we've got these massive nationwide rule changes. But how does that actually play out when you're on the ground, in your town, trying to buy a house? Let's talk about the local realities. I mean, this is probably the single most important sentence in all of real estate. What's happening in Austin or Miami has almost nothing to do with what's happening where you live. It can be a totally different world from one zip code to the next. You have to focus on your market.
And one of the key things to watch in your local area is something called days on market, or DOM. And in a lot of places, that number is slowly creeping up. See, when houses sit for sale longer, sellers start to get a little antsy. They get more willing to negotiate, and that's when you start to see a house listed for 400 grand suddenly get a price cut to 385. That's a huge sign that the power is starting to shift back to buyers.
And here's another place where buyers are getting some leverage. New construction. It's up about 15% over last year, which means all those builders are fighting for your business. So you need to be asking about incentives. Are they going to pay your closing costs? Will they throw in a new refrigerator? And here's the big one. Ask if they will buy down your interest rate. That's where the builder basically pays the lender to give you a lower rate for the first couple of years, which can save you hundreds on your monthly payment.
All of these market shifts are happening while another fascinating story is unfolding. The data is showing us that the very profile of the person buying a home today, well, it's changing, and it's changing fast. 40. According to the National Association of Realtors, the median age of a first-time home buyer is now 40 years old. That is the highest it has been in 45 years.
And just to put that into perspective for you, only 5 years ago, the median age was 33. So a 7-year jump in just 5 years. That is not a slow creep. That is an incredibly fast shift, and it tells you a lot about the economic hurdles people are facing right now.
So what's going on here? Well, the research points to kind of a perfect storm. Things like the crazy high cost of new cars and record-breaking credit card debt are just squeezing people's budgets, making it almost impossible to save up a down payment. The source also points to a real lack of basic financial education, not teaching kids the fundamentals of credit and savings early on.
And because affordability has become such a massive challenge, it's forcing a conversation about some pretty radical new ideas. One of the big ones being floated out there is the 50-year mortgage.
The trade-off here is pretty stark when you see it laid out like this. On the one hand, a 50-year loan would mean a lower monthly payment, which would help more people qualify. But the downside, whoa, it's huge. You would end up paying significantly more, a lot more, in total interest over the life of that loan.
And here's the real kicker, the potential unintended consequence. If these 50-year mortgages suddenly made homes seem more affordable every month, you could unleash a whole new flood of buyers into the market. And what happens when demand goes through the roof, prices follow, which could put us right back where we started, but with even more expensive homes.
So, from no-score mortgages to the wild idea of 50-year loans, the rulebook of real estate is being rewritten right before our eyes. And it leaves you with a really big question to think about. With everything changing so fast, what's the one thing, the single biggest change that would actually make the dream of owning a home a reality for you?